Good day, one. Good day, all. Today, I'll be discussing how I use fundamental analysis to trade Forex. So, this right here is basically my system that I use, and I'll be walking you guys through this system and how you can do this yourself as well, and for the most part for free. So, all of this stuff I actually scoured the internet manually to get all of this stuff right here for free and generate a score. I also be providing this Notion template right here. So this software that I'm using to aggregate all of this data, it's called Notion. I leave the template in the description, and you guys can use this template as well to manually track all of this stuff right here. So let's get into the explanation. But before I get into this, the explanation, I want to say that most of this stuff, well, all of it, I'm currently doing it manually, and it can be very tedious. So for the past few months, I've actually been working on a software where I can automate all of this stuff basically. So everything right here that I currently manually do, I'm planning to automate it. So for example, we have COT positioning here. I'm planning to build a COT page that manually gets COT positioning, looks at the current percentile on a 3-year basis, 5-year basis, and then you can look at this data and better visualize it. Central bank, I'll quantitatively get central bank minutes, speeches, and so forth, market pricing, policy rule deviation using the Taylor rule, get a hawkish or dovish score, economic data. It's similar to this right here that I currently manually do. So this is US economic data. So I'll just get the economic data, categorize it in labor market, inflation, growth, and then give it a score. As you can see here, economic overview, economic calendar, look, risk sentiment, and then the systematic bias management tool, which is this right here that aggregates all of this data. So this will be the tool, you can say like the master tool, that aggregates macro, risk, positioning, technicals, and central bank, and then gives you one score. So it'll give you a score right here, and it will tell you if you should buy, sell, or it's neutral or whatever, and then you have a historical trend. So the way that I currently analyze the markets from a fundamental perspective, I have to do it manually. And as mentioned, I'm just planning to build a software where I automate all of this, so I don't need to manually enter anything. But with that being said, let's get into the explanation. So first of all, my fundamental analysis, the way that I look at the market is I ask the question, what are the factors that drive price? When you look at a currency, when you look at the United States dollar and you look at the charts and see all of those candlesticks, what are the factors that are responsible for those candlestick movements? And over my trading career, I've realized that there are 5 main factors that are responsible for those candlestick movements on currencies, namely economic fundamentals, central bank policy, risk sentiment, COT positioning, and technicals. So those are the 5 factors that mainly drive price, and what can be quantified, because you also have factors that drive price that basically it cannot be quantified. Like for example, when Trump comes out and says something that's crazy, that drives price, but how do you quantify that? So the things that can drive price that can be quantified, these are the 5 things right here. So this is all I look on to determine my bias on the markets. We'll go through each of these and where I get the data from and how I formulate my bias. So the first is economic fundamentals, and for economic fundamentals, in this case, we're going to look at the United States dollar. So we're looking at the economic fundamentals for the United States. I categorized economic data in 3 categories, and these are the 3 most important categories for economic data. You have the labor market, you have inflation, and you have growth. So these are the three economic categories that you need to put price in. So for a labor market, in this case, for the United States, we're looking at JOLTS, NFP, ADP, average hourly earnings, unemployment rate, and initial jobless claims. And we look at these 6 different factors, and the way that I currently score it, it can be better, but for it to be better, it would require too much work, which is exactly why I'm planning to quantify all of this stuff right here so I can get a better calculation that is more accurate. But the way that I currently do it is simply this. So we have 6 metrics, right? We have JOLTS, NFP, ADP, average hourly earnings, unemployment rate, and initial jobless claims. Whenever the text is in green, I should probably zoom in a bit here. So whenever the text is in green, that means that we had a beat. So we had a forecast here of 7.3 million and the outcome was 7.7 million. So we had a beat. So that's positive. And whenever it's in red, that means it's a miss. So given that we have 6 readings right here and 4 of them are a beat, so we have 1 here, 2, 3, 4, and then we have 2 misses in the labor market. So given that we have 4 positive and 2 negative, this would mean that the labor market currently has a green reading, so it has a single positive. So this is why you see this single green here for the labor market in the US. So we have more beats than misses. So this is positive for the United States dollar, because this means that the Fed, they may more than likely slow easing of monetary policy, given that we have a strong labor market. So that's number 1. Next, we have inflation, and for inflation right here, it's a similar logic. So I look at CPI, year over year, core, PPI, and PCE, and I basically do the same thing again. So we have 6 reading right here, and you can see that we had 2 inflation reading that beat, 2 inflation reading that fell below expectations, and 2 inflation reading that was in line with expectation. So basically this is neutral because we had 2 beats, 2 misses, and 2 in line with expectation. So on an aggregate basis, the US economic as it relates to inflation, it's neutral, you know, where we saw beats, but we also saw the same amount of misses, and we also had 2 neutral reading. So that would give a neutral reading, and you can see this is why the score is neutral on inflation. And then lastly, we have growth using the exact same similar logic again. So we count how many metrics we have, and then we basically aggregate these. So for these, we have 5 misses and 5 beats. So overall, that's 5 divided by 5. So it's a neutral reading. We do not have more misses than beats. So this is why growth in the US currently has a neutral reading as well. And then overall, when you aggregate this, we have labor market, which is strong, inflation that is neutral, and growth, which is neutral. So this gives a reading of 1 bullish, you know, basically 1 bullish point. Now this is a very simple logic, and as I said, I'm actually building a system that is a bit more nuanced and dynamic than this, that takes into consideration a lot of other stuff. But for now, seeing that I'm manually doing this, this is the simplest and least tedious way of getting this done. And I mean, it gets the job done. I've been using this for a few months now, this exact system, and it has been working. But it can be a bit more dynamic, but that would require a lot of calculation, and that would be too complicated for me to manually do. So that's how I look at economic fundamentals and judge economic fundamentals, and this is an example with the US. So you can see that economic fundamentals, we currently have a bullish point of 1. Next, we look at central bank, and this I currently use a lot of discretion and my own intuition to get whether the Fed is more hawkish, dovish, or neutral. So I will look at the FOMC press conference, and I also look at the FOMC minutes, and I read them and all of that stuff, and if I see that they are bullish and if I see that they are hawkish and the market reaction tells us that it is hawkish, then I would give the Fed a score of hawkish, which is positive for the dollar, so that would give 1 bullish point. And if they're dovish, that's negative for the dollar, and that would be red right here, so a negative bearish point. And if they're neutral, that would also be that would be just a neutral score, so neither hawkish nor dovish. And what I've been doing recently, I'll show you a website here. I like to visit this website here. It is called itcmarkets.com. You can see the link right here. I put this in the description. And what it basically is it gives you the hawkish and dovish. It gives you a hawkish and dovish analysis of each of the FOMC members. So if I enlarge this right here, you can see that this was last updated on the 2nd of July, and it shows how hawkish or dovish each FOMC member is. So on the bottom here, this is most hawkish, and up here is most dovish. So you can see at the moment we currently have more dovish members than we have hawkish. So this in theory should give a slightly more dovish reading, but just based on my intuition and experience from trading, the Fed overall is more neutral. It's more neutral to dovish. So this is why we have a neutral score right here on Fed. So it's neither really hawkish or dovish, but you can use this website here to get an idea of how particular central bank bias is. And you have the same here for the ECB, the Bank of England, and the Bank of Japan that you can visit. You can see how hawkish or dovish a central bank is, and that's basically how I get the score. And as mentioned, I'm planning to quantify this, so not a lot of intuition or discretion is involved, and it's 100% systematic. So at the moment, I read and I watch meetings, and that's how I come up with my neutral or dovish score. But with my system that I'm currently working on, I'll do all of this quantitatively, so I won't be manually guessing if they are hawkish or bullish. I will use natural language processing to analyze FOMC minutes, their speeches, their conference. I look at hawkish word counts and whatever, and this would give me this is one way to look if they're hawkish or dovish. Then we have market-based pricing, so you have things like swaps, the two-year treasury yields and all of that stuff that can tell you if the market is interpreting the Fed as dovish or hawkish, and I'll use that. And then you have something else that's called the Taylor rule, which is a calculation that you look at inflation, employment, and growth, and then it says based on this the policy rate should be this. So if the actual policy rate is this, that would mean that it's dovish or whatever, and then we aggregate all of this and it gives you a hawkish or dovish score. So that's how I'm planning to quantify all of that stuff, so I don't have to guess whether a central bank is currently neutral, hawkish, or dovish. But at the moment, I have to make do with what I have, so I have to just watch, listen, and read to get my bias there. And you can get all of this data on central bank meetings and all of that stuff from Forex Factory right here, or you can go to sorry, not Forex Factory, this is FX Street, or you can go to Forex Factory and you can read and see central bank meetings. So here you had BOJ, Governor Ueda speak. You can open this here and basically read what they said. So the most recent BOJ speech, you had Governor Ueda saying this, so you can just read all of that and understand whether they're dovish or hawkish. Or if you have the money, you can use prime market terminal here, which I'll load up in a minute. So you can use prime market terminal here and you can look at the news, see everything that's happening in the markets. You can read the recaps right here and see whether markets. You can scroll to central bank here and you can read right here to see the Federal Reserve, ECB, Bank of England, RBA, Reserve Bank of New Zealand, Hong Kong, Bank of Japan, everything basically. So this is a lot more comprehensive, and this is what I actually use to determine whether Fed is hawkish, dovish, or neutral. But this is a paid software, so if you can't afford this right here, you can use the free alternatives, but you can use this right here. And another amazing feature of prime market terminal, you have interest rate pricing, so you can actually see what the markets are currently pricing in as it relates to interest rate, and this can also help to determine, you know, whether a central bank may be hawkish, dovish, or whatever. So that's the second metric here. So we covered economic fundamentals, we cover central bank, and the next is risk sentiment, which is very simple. So the way that I judge risk sentiment, I look at these 5 different factors. I should remove this here because I haven't looked at that in a while, but I look to the put to call ratio, I look to the yields on junk bonds or high yield credits, I look at the volatility index, I look at the S&P, and I look at the Bitcoin to gold ratio. And I use all of these metrics right here to determine if market is currently in a risk on or risk off regime. And you can see that at the moment of recording, we're in a risk on regime, as yields on junk bonds are going down, the volatility index is going down, the S&P 500 is going up, and the Bitcoin to gold ratio is also showing risk on. So that's basically how I judge risk sentiment. And then currencies react differently to risk sentiment. So as it relates to the dollar, there isn't really a set pattern as how dollar reacts to risk, but whenever there's extreme risk off, that's when you see the dollar tends to react in a, you know, somewhat linear fashion to risk. So whenever there's extreme risk off, the dollar tends to gain strength on safe haven status. So for something like the yen, this reacts more to risk. So whenever there's risk on, the yen tends to underperform, and whenever there's risk off, the yen tends to outperform. And Australian dollar is a similar story, but the opposite of the yen. So on risk on, the Australian dollar performs well, and whenever there's risk off, the Australian dollar performs poorly. So that is risk right there. I look at different market metrics to determine whether risk is on or off, and then based on how currencies perform in particular risk regimes, I give my system a score based on that to say risk on, so it may be bullish for the dollar or whatever. But in this case, as mentioned, during risk on or normal trading environment, the dollar does not really trade with risk. Only during risk off do you see the dollar, you know, get a lot of safe haven demand. So that is risk right there. And next we have COT positioning. So for COT positioning, I used to look at non-commercials and leverage funds. And if you don't know what COT positioning is, every Friday, we actually did not get the release this Friday because it was a holiday, so we were going to get this on Monday. So every Friday, what we usually get is an update called the Commitment of Traders report, and this is from the CFTC, where institutional investors such as asset managers, leverage funds, and we also have non-commercials, they have to report their positioning. And I mean, there are institutional investors, these are guys who are managing millions, so usually they tend to be on the right side of market, following trends, and asset managers specifically, they tend to lead trends. So this is why I only look at asset managers. So I go to this website here called Bar Chart. Well, this is the free version, this is the free alternative. If you have Prime Market Terminal, you have the asset managers right here that you can look at, which is a lot more comprehensive than Bar Chart right here. But if you have Prime Market Terminal, you can come here and you can see for USD positioning, they are currently bearish, but they have been building US positioning, which we'll talk about soon, and how I analyze that for the pound. You can see that they're basically neutral. They have been unwinding a bit. For the yen, they are currently over positioned. They are very long, the longest they have been in over 3 years, as we can see on this chart and whatever. So that's how I analyze COT positioning. And what I do is simply to give it a score in my system. Is at the moment it's very simple, but as mentioned, I'm going to quantify all of this stuff here. I've been working on the design, and I've also worked on the code and how I'm planning to quantify this logic. So at the moment, the way I give COT position a score is if asset managers increase their positioning, that gives a bullish reading, you know. So that is basically, it gives one bullish point. So the most recent COT positioning showed asset managers increase their positioning, as we can see on this chart for the US dollar. So we can see we have the US dollar here, and this was their most recent positioning. So on the 17th of June, they were here and then they increased their position into here. So this gives a single bullish point. It tells that asset managers are actually increasing their positioning. And what we've seen here is asset managers have been bearish on the dollar, the most bearish on the dollar for the past 3 years. And matter of fact, I think this is in the history, this is the most bearish they've ever been. If we look at all right here, we'll have a look. So this is all. This is their, well, this was their positioning on the 10th of June. So you can see that right here, recently, the last 2 weeks, in the history of COT positioning, this is the most bearish asset managers have ever become. And if we zoom in on this chart here a bit to 3 years, you can see that they have slowly started to build some position. So that's why I have winding here. This is something important to know. Remember, these guys, I have backtested the data, and they most of the time they catch the highs and catch the lows. Perfect reversals in the market. So COT positioning seem, based on what I'm seeing right now, they seem to be building longs on the dollar. So this is a sign that the dollar could be bottoming out on the charts here. So what we see now is the most recent data showing them adding positions where it has a single bullish reading right here. And yeah, the last one that we have now is technicals. And technicals, very simple, very straightforward. I'll load up trading view here. So on trading view, as it relates to technicals right here, I use 3 different factors to give a technical score. I use the 200-day moving average, the exponential moving average, as you can see here. I use the super trend indicator with a period of 14, and I use the RSI. So those are the 3 indicators, technical indicators, that I use to give us a bias as it relates to technicals. So you can see that for the dollar at the moment, super trend is giving a negative bearish point, 200-day MA is giving a bearish point, and RSI is giving a bullish point. So the super trend is, we're below the super trend. As you can see, this right here is red. So super trend is telling us that the trend is down. We're also below the moving average here, so that is also bearish. And then the RSI, you can see that we have slowly started to get out of this oversold on the RSI. But whenever we're oversold on the RSI, this is usually a sign that the dollar may actually correct a bit. So this is why it has a single bullish reading on RSI right here, and it's giving a total when you aggregate it. So 2 bearish plus 1 bullish gives you 1 bearish. So this is why this has a single bearish reading right here, and that's how I judge technicals. And then I basically aggregate all of these scores right here to give an overall score of a single bullish. So from economic fundamentals point, we have 1 bullish. Central bank is currently neutral. Resentiment is currently neutral. COT positioning is currently signaling bullishness, and technicals is currently signaling a single bearish. And then in total, this gives us a single bullish because we have 2 bullish and 1 bearish. So that's basically how I formulate my bias in the market. And then I use a bit of discretion. So I'm 90% systematic and 10% discretionary. So I like to read and analyze stuff in the markets. And if we go back to prime market terminal here, I have what's called a mood board, and I'm wondering where my dollar analysis is. I must have removed my dollar analysis, or I did not add one. I'm not sure, but I think I did. But the next thing that I want to do, and the discretionary side of my trading, and this is where my intuition and skills and experience come in, is I look at all of this, and right now it's telling me that, hey, the dollar, it's slightly bullish based on all of this data right here. And you can basically put a narrative or a story together. So the narrative right now is most people are bearish on the dollar, right? Most people are selling, as we can see even from COT positioning. We can see that asset managers are basically max short on the dollar, even though they have been building longs, which is the first sign of a reversal and that we may be forming a low. So that's one sign. We're oversold, and we have asset managers who were the most bearish that they have ever been on the dollar now winding. So they are building position. The technicals, we're obviously in a downtrend, so this will be red, but we're oversold in the RSI at the moment. So this is another sign of a reversal, but overall technicals are red. Risk sentiment is not weighing on price, and the Fed is actually not really weighing on price. But this is where the system lacks, because the last meeting the Fed was fairly neutral, but if you look at market pricing, if we go to interest rate pricing here, basically with the NFP data that we had, the markets had to reprice a Fed meeting. So we can expect that the next Fed meeting, the Fed may actually be a bit more hawkish. So in reality, this may actually be a tailwind for the dollar, because markets are currently anticipating a more hawkish Fed, but my system doesn't really take that into consideration at the moment. And again, this is why I'm planning to quantify all of this stuff right here, and this is a central bank design that I've came up with. So currently my system, it's saying a neutral Fed, but it does not take into consideration market pricing. So if it did, it would probably be giving a hawkish score as it relates to central bank at the moment, but it's neutral. But I know that based on reading and analyzing and using my discretion, that central bank should basically be hawkish. And then economic fundamentals, as we can clearly see from the US, the labor market is showing a lot of strength, but inflation is neutral and growth is currently neutral. So with the upcoming economic data, if we actually have PMI beating expectation, and so far on July 1 we had S&P manufacturing PMI beat expectations, we had ISM manufacturing PMI beat expectations, and we have S&P services PMI beat expectation. So far this month, everything is showing signs of markets having to reprice Fed easing expectations, and these are all dollar positive. And then when you take into consideration that everyone is bearish and everyone is short the dollar, this has the potential to create a capitulation. So everyone who was short will maybe have to cover their positions now as market pricing and market risk changes. You will also see some profit taking. So people who were short and enjoyed all of this dollar run all the way down, they may start to take profit now. So they were short, they sell, and now they have to buy to take profit. So that can also push price up. So based on my system right now and my own analysis, it's telling me that the dollar may be creating a low. So that's what my system is currently telling me. So that's just some analysis right there, how I aggregate all of this data and how I use it to formulate a market bias and then create a narrative and trade around. That's how I use fundamental analysis right now. And if you guys stick around for long enough, you will see this software right here that I'm currently developing come to fruition. So this will soon be a live software that's up and running, and I'll use, and I will no longer have to manually do all of this stuff right here. So COT positioning, central bank, systematic bias management tool, and all of that fun stuff. So yeah, that's about it for the video today. I hope you guys enjoyed it. I hope you learned something, and yeah, peace and trade safe.